Hey guys, welcome back to the channel. Now, a few of you in the comment section have been asking me to go through a sort of, study with me, walk through a question type of video. So that's what we're going to do. Okay, so let's take a look at this question. Now, if you're somebody who's currently studying costing in a particular management account decision and control, then this question is going to help you out. So we're going to go through this entire question slowly to help with your understanding. Now, if you've got any questions afterwards, feel free to put those in the comment section below. But otherwise, let's get started. This is a two-part question, and firstly, we're being told that a company is considering changing the way that it manufactures its current products. And we've got a table here that shows us exactly how the proposal would compare by the way the company manufactures its current products. So here, we're being told that currently, direct materials are £11 and we use 3 kilograms. We're told that direct labour per unit is £25 per hour and it's taking 30 minutes to create 1 unit. Other variable costs are £4 per unit. Fixed costs, we've got £60,000. Sales are 6,250 units at £63. Now, with this proposal, we're being told that direct materials price is going to increase by 6%. Usage is down by 9%. Direct labour material per unit is 22 minutes at £25 per hour. Other variable costs £5. Fixed costs 67,000. Sales are 6,700 units, and that's going to be sold at £59 per unit. So, what are we being asked here? So, we're being asked to calculate the total profit under each situation. So, under the current situation and the proposed situation. Now, you can see here that as part of the question, I've prepared a table here for you to work out the proposal costs. Now, this is not part of the answer, so the answer is actually going to be this bit down here, where we've got our revenue, materials, etc. to work out total profit. Now, if we don't do this, it's going to make it very difficult for us to pick out the costs that we require to work out the total profit. So if you're doing this in the exam, I'd recommend that you prepare a table very similar to the information that you've been provided already, so you can compare like with like very, very quickly. So let's take a look. So if direct materials have increased in price, then we want to increase this £11 by 1.06. So that's going to give us £11.66. Now with the kg, we're told that usage is actually down by 9%. So we want to take this £3 and times it by 0.91. And that's going to give us £2.73. Direct labour materials, so that's going to be 22 minutes here and £25 per hour. Other variable cost is £5 per unit. Fixed cost 67,000. 6,700 units. Sales at £59. So you can see how quick that was to fill that in. And now we can very easily compare the two. So let's take a look at this table down here. So we want to pop in revenue. So our revenue currently is going to be 6,250 units at £63 per unit. Our proposal is going to be 6,700 units at 59. So here we've now got 393,750 current revenue versus 395,300. Now that doesn't mean automatically that the proposal is going to give us a bigger net profit. It might be that the costs associated with this proposal are much larger than current, which is why we need to do this exercise. So materials, that's going to be the 3 times by 11 in the current table, times by the total number of units, which is 6,250. So that's going to give us 206,250. The proposal is going to be the £2.73 times by £11.66 kg times by 6,700 units. So that's going to give us £213,273.06. Labour, so this is where people go wrong sometimes because this is total cost per hour. So we've got £25 per hour. So we need to take that and then divide that by 2 because it's taking 30 minutes to create 1 unit. And then we're going to times that by the total units. So that gives us 78,125. So with this one, labour hours are 22 minutes to create 1 product. So to calculate this, don't overcomplicate it. Instead, I would take the total pound per hour, which is 25, and I would divide that by 60 minutes divided by 22 minutes. So the 60 minutes in an hour divided by 22. So take the total cost per hour and divide that by that, and that's going to give you a total price per 1 minute. And then we times that by total units, so 6,700, and that gives us £61,416.67. Other variable costs, I'm going to take the £4 per unit currently times by 6,250, and here in the proposal, £5 per unit times by 6,700 units. So we get £25,000 in the current and £33,500 in the proposal. Fixed costs in current are 60,000 and the 67,000 in the proposal. And to work out the profit, just take the revenue minus the sum of all of the above, and we can see here that the proposal is actually going to give us a lower bottom figure, so a lower profit overall than what the current does. So let's move on to question B here. So we're being asked to write a brief report that explains the results of our calculations in question 1, and that the report must show the impact of each part of the proposal on the expected profitability. So let's take a look. So what I will say with this type of question is, and with all types of costing questions, what you want to do is state the absolute obvious to the examiner. So the examiner can see the figures that you've produced here, but you want to be making sure that A, you're mentioning those total figures in your written answer, and that you are constantly throughout comparing like for like. So we'll see that here. So first of all, my model answer would say the proposal shows an estimated profit of £20,110.27, which is lower than the current method of manufacturing, which is £24,375. So that's obvious that it's lower, but if you're stating that to the examiner, then I would say that that's much better. That's a better written answer than somebody who just states the two. Now, we're saying here that there is a reduction in total profit of £4,264.73 in the proposal compared to the current method. So again, that's really obvious, but you want to state the absolute obvious to the examiner. So again, constantly comparing like with like. So let's move on to sales. So here we're saying the current method of manufacturing creates a sales price per unit. So again, in this answer that you want to be given, you want to make sure that you're mentioning price per unit. So we're saying the current method has a sales price per unit of £63, and that is £4 higher than the proposed sales price per unit of £59. So again, comparing like with like. And we're saying that's a contributing factor towards the lower profit estimate in the proposal. But there's another factor that we need to take into consideration here, because actually in the current method of manufacturing, we actually only have 6,250 sales units versus 6,700 being sold in the proposal. So the combination of the sales price per unit and the total units sold has actually resulted in a lower proposal of revenue than in the current. So let's move on to materials. So here we're saying, as illustrated above, there is an increase in the total price per unit for both direct materials by 6% or 66p per unit. So again, comparing like with like, and there's an increase in other variable costs by £1 in the proposal. So again, we're mentioning price per unit here, we're mentioning increases, etc. This has created a total increase in material costs of £7,023 and an increase of other variable costs of £8,500. So we're saying here that the materials and other variable costs have increased. So we're talking about the differences between the two, and again, comparing like with like. And then we're going to go on to say, how has this impacted the total profit? So we're going to say, because of the above, this has reduced total profit in the proposal even further. Next, we'll move on to labour. So we're going to state the obvious again. So we're going to tell them what's the difference between the total labour in the proposal and current. So we're going to say, there is, however, a cost reduction in terms of total labour spend of £16,708.33. And then we're going to state why. So this is a direct result of the reduction in time spent to make one unit, and that reduction is 8 minutes in the proposal, because previously in the current method of manufacturing it's taken 30 minutes to make one unit, but in the proposal it's only taking 22. And then finally we can look at fixed costs. So we can clearly see that there's been an increase of £7,000 of fixed costs in the proposal, and the impact of that is that it has negatively impacted upon the total profit in the proposal. So there you have it, that would be my ideal answer. Now, if you want to start practicing this type of question, I actually have a few questions on the website that you can purchase, so there are some questions and answers there for you to practice on your own. Anyway, if you like the video, then give it a thumbs up, consider subscribing as always, and I shall catch you on the next video.